Greetings. It's Professor Gibbs here. I have recorded this video to help students with Event Math 2 as a way that they can study and do it on their own and help them. First and foremost, Event Math, I want to repeat what it's about. The purpose of it is to help you become familiar with working with a spreadsheet system. In this case, it's Google Sheets. I also am trying to get it set up so that you work with formulas and analysis in Google Sheets so that you can help make financial decision makings in a live entertainment perspective. In the past, you've done Event Math in Google Sheets as an introduction. This session is about Event Math 2 and specifically events expense categorization. So what did you learn in Event Math 1? You learned this thing called pre-production expenses and production operating, as well as the difference between variable and fixed expenses. So one of the things that we found, a lot of people when they read the Event Math stories will get confused between pre-production and production operating. So, pre-production, I want to highlight is they're one-time fixed expenses in sort of the creation of the event, whereas production operating are expenses that show for the show or the event as its actual running. So one of the big confusions I think people have is pre-production versus production operating. The thing to think about is if the show was canceled, right, and needed to be scheduled again, these costs would still happen, is a good way to think of it. And versus production operating would be other costs. And that. So when we look at the show development process for an event and we look at, we spend all this time sort of creating an idea, designing it, recruiting it, rehearsing it. And this is all done before you actually go on sale with tickets to a show. That's kind of pre-production costs versus production operating is once the show starts selling tickets and there's people in the seats to attend seats or the venue or whatever you're doing. That's production operating costs. So I hope that sort of example helps you with the confusion of them between the two. The other thing people really struggle with is the difference between variable and fixed. So fixed costs are those that don't change or increase based on the number of tickets sold. So a very common one is things like rent, the wages, audiovisual costs, things like that. The variable costs is what people really get confused with. And they're expenses that increase or decrease based on the tickets sold or number of people attending an event. What can really kind of help you with that is it has to increase or decrease depending on the sold tickets. So it's only if tickets go up or down. And I think that after this workshop on Event Math 2, you're going to understand the types of things this is with regards to credit card fees, taxes, royalties, and other things that are source deductions. So I hope that this Event Math 2 will help you better understand variable. Variable does not mean if I have 6 security guards and they work for 6 hours, then, it's 36 hours of work times $20 per hour. No, variable means only if the expense is directly related to the actual ticket sold. Okay? So problem set 1, you got familiar with Google Sheets. You learned pre-production expenses, production expenses, and variable production expenses. So you got an understanding of those different concepts. Today, we're going to, this video is going to really focus on revenue and something within revenue called source deductions. Okay? So, and source deductions are basically deductions away from the revenue even before the expense line. So if you look at a typical income sheet that starts with revenues at the top and then it goes expenses and then at the bottom it goes profit, these source deductions are removed from revenue before they're even the event's revenue. So where does all the money go? As we saw in past discussions, the primary source of money for events and live entertainment is ticket sales. There are other ancillary revenues, but primary driver is ticket sales. So you have to have a really good understanding of how to budget ticket sales and manage that, which this module will help you with. When you think of the revenue streams for an event, it's beyond, ticket sales. You see, I like to think of a tree. And if you look at the trunk of the tree as the audience, and the audience can be a paid audience, Or if it's a festival that's free and people don't pay, it could be a free audience. But in either case, all your revenue streams, for the most part, are dependent upon your ability of your event to attract live people to attend. And once they're there and they're attending the event, you can generate revenue from different sources. So things like merchandise or ticket revenue or food and beverage can all be generated from that. And then consequently, you can generate other revenue, like such as grants for the event from governments. You can generate it from sponsors. You can generate it from donors or membership sales or subscriber sales, all kinds of different revenue streams. So one of the areas that we're going to talk about this week, and you're going to see in your event math, is ancillary revenue. Okay? So ancillary revenue is essentially non-ticket sales revenue. The most common examples we're going to talk about today are things like grants or sponsors or merchandise or food and beverage. We will not be talking much in the course even about donors, memberships, or subscribers. They're slightly they're very specialized in the nonprofit sector, and if you work in that sector, you'll become very familiar with those things. So we're going to spend some time digging into ancillary revenue. Within ancillary revenue, from a budgeting perspective, we either have what we call fixed ancillary expenses. So fixed are expenses that don't change with the number of tickets sold. So very common types of ancillary revenue are things like government grants. So if you are hosting an event and you're able to get a government grant from somebody to host that event, then that would be considered ancillary revenue that you get on top of the ticket sales. The other one would be sponsors. So sponsors can come in many ways, shapes, and forms. You can have somebody be the title sponsor of your event and give you money to have their name associated with your event, or you could be generating sponsorship revenue from things like tent rent. So if you go to a festival and you see a bunch of different displays where somebody's selling different retail type items, those people would maybe pay $500 or $1,000 to have their table there during the course of your event. So that would be, all kinds of different sponsorship revenues, which we'll talk about in future classes. The other one is things like variable expenses. And these are, again, changes with the number of tickets sold. So as an example, sometimes when you're working an event, you will, depends on your deal and how you do things, if you're running an event, you may say merchandise revenue. And you may say, I want a budget that I'm going to profit $2 from every person coming in selling them merchandise. So as an example, you would potentially, sell t-shirts for $10. They cost you $5 to make. And after all your other costs, you keep $2. So you would, on average, $2 per person coming in, you generate in merchandise revenues. Or food and beverage, you could generate revenue for every ticket sold from a food and beverage revenue perspective. On a per person attending, you could make, an additional allotment of money. So we've got these things called source deduct. So that is the revenue area. And that's very sort of what we call top line. And then there is these thing called source deductions. So before you get your revenue, you have these things called source deductions that come off of your revenues before you even consider the next areas of your income statement. And they are deducted at source. So they're taken away before you start to then start to take all the other event expenses, such as pre-production expenses or production expenses. Okay. So from a ticket pricing perspective, I thought I'd share with you an example. I recently purchased tickets to the Strumbellas. The Strumbellas are a sort of country meets pop kind of band. They're from Ontario and they're fun to go to. Really fun audience. The average age is probably 40 plus at their shows, and very much a not necessarily a seated environment, one where people are standing and dancing. Really fun event. So I purchased these tickets. I spent $213 purchasing the tickets. Okay, I bought 4 tickets. What you see on the right here is my receipt from Ticketmaster for purchasing them. So the question here is, how much of the $213 does the event producer keep, right? So, it cost me $53.25 per ticket, but there's a lot of, hidden fees in there that get eaten up that the event producer doesn't get. And these are what we call source deductions, so that you don't get them. So I thought I would mock up this as an example for you. If a ticket cost me $53.25, how much of it would I be able to keep? If you do want to learn more about this, just go to Ticketmaster, and all ticketing platforms have very similar fees and systems attached to it. But so if I basically bought a ticket, if the face value of the ticket was $42.50, they added service fees of $10.75 per ticket. I paid $53.25 per ticket. This is what we call above the line. In other words, you as a consumer buying the tickets, you see this. These are visible to you, and you see these expenses. What you don't see is these things called below the line expenses. So below the line expenses are things that maybe aren't directly related to the show happening, but they're services that are going on in the background that are related to the show. Okay? And they represent costs for the show that you, as the event producer of the show, don't get to keep. So, what are some of the examples of below the line expenses? So, taxes. In Ontario, if you purchase a ticket in Ontario, HST is 13%. Now, depending upon where you're purchasing that ticket and where the event is, those taxes will change. Quebec has a different tax rate. Alberta has a different tax rate. You go to the US, they have different tax rates. You also have these things called venue fees. In my days, we called them, building improvement funds. They're also just called venue fees. What essentially they are is fees that the venue that you're renting from say, hey, every time you sell a ticket, I need to charge, let's say, $3 or $4 per ticket. And that $3 or $4, if it's a building improvement fund, goes back to the venue, and the venue uses that to help improve and keep the building upgraded and professional, and a good quality experience for people. Or it's just a way for the venue to make extra money when they run events. The other one is credit card processing fees. So every time that you use your credit card, if you spend $100 on your credit card, that retailer doesn't get to keep $100. The $100, the credit card that you use and the payment system that you tap with, all get a percentage of that. So it averages between 1.5% to 4%. So if it was 4% as an example, and somebody spent $100 with a retailer, that retailer only gets $96. So they have then the 4% is kind of deducted from their revenue right away. The last one is ticket selling commission. This is below the line. It's not uncommon for some events to work with people to help them sell tickets, and they'll work with a local ticket selling agency or a brokerage firm that will say, I'll give you a commission of 10 or 15 or 20% off every ticket you sell. Very common, not necessarily with single individual tickets, but very common if you're working with a venue and says, we'll manage the group sales for you. So that's when you have 20 or more tickets. And that's very common in that space. So what are some examples here of above the line and below the line? In this case, you saw above the line, the customer paid $53.25. What you didn't see was the below the line costs. So the below the line costs were, taxes, HST at 13%. And you'll notice the calculation of this is kind of not just 13% of $53.25. You basically, $53.25 includes 13% tax. So in other words, how to calculate that is you take the $53.25, you subtract $53.25 divided by 1.13, meaning 13%, and then you get the figure of $6.12. If you had calculated 13% of $53.25, you would be wrong. So as an example, if I went 53.25 times 0.13, that would be $6.92. So that's not correct in this case because you're not paying 13% of 1530 5325. You're 13 the 13% is built into that. In this case, there was a venue fee of, let's say, $2, and I'm making up the venue fee here as an example, and the credit card processing fee, let's say it's 3%. Now, you'll notice the 5325 is multiplied by 3%, and not built in like the taxes. So because the way that they'll work is the credit card provider will charge the 3% on the total cost of the transaction, so that then you would have to pay that. So the total below the line costs are $972. So what's interesting here is for a face value of a ticket that's $42.50, you're only getting $9.70. You're paying below the line costs of $972. So you're, as the event producer, only getting $32.78. Okay, so it's that's quite a significant difference from when you think you're getting $53.25. You as a consumer may think that they're getting, but when you include all the below the line costs and everything, you're only getting $32.78 of that. So in this case, that's only 62% of the cost of the ticket, right? Of what the consumer paid. If the consumer paid $53.25 for the ticket, I'm only getting 62% of that. So in other words, if I paid $213 for my Strombella tickets, the event promoter doesn't get $213. The event promoter only gets $131. This is a really important lesson for anyone looking to produce an event, is to understand their source deductions and how much of the revenue that they get to keep. Okay. So what did we learn here? So it's the face value is what you see that's above the line and is visible to the buyer. And you as a consumer may think that that's what goes to the event, but the actual dollar is much less than that. And there's a whole bunch of costs that are below the line that are what we call source deductions that that you don't get to keep. Now, I do want to highlight one thing that you're going to bump into when you do event math. And that confusion is the confusion of taxes. Well, all-in pricing is the norm for Canada in live events, and it is not the norm across all events and across all regions. We actually have a law in Ontario for things like flights and for plane tickets and for event tickets in Ontario that it needs to be included. All the costs need to be included. So we have this all-in rule for those types of things. So and it's really common for all consumer-based ticketing events. So when you buy tickets to theaters and shows and concerts and things like that, it's kind of it's included. And it's very common on platforms like Ticketmaster. Now, it's common, but it's not the rule. There is very commonly taxes are added on top. So when taxes are added on top, the event, if the event ticket sales, the face value is $30, the consumer has to pay $33.90 because the taxes are added on top. The event keeps the $30 less the source deduct, less the below the line. Whereas if it's an all-in pricing example, if you see, they only keep $26.55. So this understanding of where taxes are charged and kept is really important, especially if you're hosting events in Ontario, because 13% is a pretty significant number. Okay. So what did we learn here today? We learned the following. I think first off, we talked, the section of event math is about revenue. Okay. And, that there's lots of different multiple types of revenue and that you need to basically account for them when doing budgeting. And then the other side of it is you really have to have a really good understanding of source deductions and taxes and how that they're dealt with. This image you see here below that I'm using is from Ticketmaster, and it shares essentially the costs, that not all the money goes, while Ticketmaster has large fees, not all money goes to to Ticketmaster. There are the artist and promoter is there as well. What I did not talk much about is that under the Ticketmaster fee, if you see a ticket handling fee of $10.75, not all that money goes to Ticketmaster. So they would potentially have to pay the venue some fees in there. Depends on their deal with the venue, and every venue is different. And depending on the artist may have a deal that says, if I sell all my tickets with Ticketmaster, I get a certain percentage of the revenue. So it's not, I don't think that you can necessarily, well, we all want to hate on Ticketmaster. Ticketmaster is, yes, it has fees, but those fees and that revenue is shared with the producers and promoters. So it's not as simple as just looking at your ticket fees and going, oh no, Ticketmaster bad. All right. So what I want to do now is we're going to do some. I'm going to try to do two examples for you, so that if you because we're not doing this in class, that you can go to the videos and learn from. So highlighting that, for all of your event math questions 1 and 5, you have video instruction videos included. You do not have instruction videos included for events, the questions 2, 3, and 4. I'm going to try to do numbers 3 and 4 here for you to share as an example for you to learn from. Okay? So I'm going to go to D2L. I'm going to open my Brightspace. I'm going to go to Business of Events and Live and Entertainment. And I'm going to go to Content. I'm going to go down to Event Math. Event Math Problem Set 2. First off, I'm going to download the Event Math template. Okay? So I've got my Event Math template here. And the very first thing I'm going to do is I'm going to File. I'm going to make a copy of that. And I'm going to rename this C. Gibbs. And I'm going to save it in my Event Math worksheet, C. Gibbs example. Example 2, I'll call it. I've made my copy of it. So I'm going to make a copy of it. That way, this is my sheet and I can make edits. I can't make edits on the standard work template. So now that I have a copy, I can make edits on it. So just to remind people, I have a tab for definitions. So if ever you're reading things and you're trying to understand things, you've got the definitions to go to. You have a template here. This is a template that you can, add more sheets on based, and the template has kind of 2 parts to it for you. One is on the left is the instructions, or the place to enter your information. On the right here, you'll see in light gray and light blue is formulas. So if you're not familiar with Google Sheets, these are examples on how to write formulas, so it can you can get things going. And you will notice I have light gray. These cells represent fill in your notes and explanations, and blue is where you put in your formulas. Okay, so that's what they are. I'm going to go to problem set 1. I don't have a problem here yet, but I'm going to go back to D2L. I'm going to go to problem set 3. Sorry, I'm going to start with problem set 3. I'm going to go back to D2L, and I'm going to go to event problem set 2. I'm going to start it. I'm going to preview it. I'm going to start the quiz. And problem set 2. Page 3. This is P2 Q3 open mic. Perfect. I'm going to copy and paste that. Okay. I'm in P2 Q3. I'm going to copy and paste it right here. I'm going to go into the formula bar to paste it, because then it comes in much cleaner. And I'm just going to hit right click, and I'm going to hit paste. Okay, perfect. Okay, so I've got my story up here and my everything else below. Okay, so I'm going to start out with my story, and you're organizing an open mic night for your university. The cafe near campus gives you the option of paying rent of $800 or a discounted rent of $300 plus a $2 per guest charge. Because you're worried about breaking even, you choose the lower rent at $300 and agree to a $2 per guest, a fee of $2 per guest. If you choose the discounted rent, $300 must be paid in advance of the event, and the $2 per guest fee charge becomes a social deduction. Okay, so I'm gonna highlight something within the story just to put it red, just to keep it. This is a whole long. We haven't had an example like this, but this is an example of source deductions. And I'm going to make this part of the story red. So that will tell me I've done it. Okay. So essentially the $300, because I have to pay it in advance, right? Must be paid in advance. Then it becomes a pre-production expense. And that's kind of different. It's going to vary whether it's pre-production or production. Most of the time it's production operating expenses, rent is. But in this case, it's going to be $300. So I'm going to put $300 per unit here. I'm going to do 1 unit. And I'm just going to go equals the sum of $300 times 1. There we go, $300. Okay. So, and then I've got this fee of a source deduction, and the source deduction is a variable rent. In other words, I want to collect $2 per ticket. I don't know the number of units yet because the story hasn't told me that. So I will get to that in a second. The all-in event ticket price is $14 for the evening. Okay. So I'm going to swipe that $14. Okay, it's $14. So all-in ticket price. Number of seats available. I'm not doing number of seats or sell-through rate. That's going to come up in future ones. Number of tickets sold, I don't know yet. The price per ticket I'm going to sell is $14. Okay, so I've got $14. Venue manager ticket sales or Eventbrite. The fees for selling tickets are 3.5% credit card fee plus $1.29 paid per ticket. Okay, so I've got 2 fees here to calculate. 3.5% credit card fee and $1.25 per ticket. Okay. Okay, so I'm gonna then go down on my source deductions, and the first one is a per ticket transaction cost. Eventbrite. It's $1.29. And I have a credit card fee of 3.5%. Okay. Now, I don't have that number, right? But I do know it's 3.5% of $14. So I'm going to just essentially go equals round. I'm writing this formula called equals round. And anytime I'm using a percentage in event math, I need to use the formula equals round versus equals sum. And I will show you why. Equals round, I'm going to multiply it by $14 times 0.035, which is 3.5%, right? I'm going to put a bracket on it. Oh, and equals round, and I got to put two decimal places. So that will round that number to 49 cents. The sales tax will be collected by Eventbrite, and people will pay that fee on top of the $14. Okay, so that's basically telling me I don't have to worry about sales tax in this scenario. Okay, it's not my budget. I'm not going to build anything in for it. To build anticipation event, you spend $50. $50 on advertising. Okay, I'm going to bold and red that. I print posters for $15. Okay, I'm going to bold that and red that. And you need to buy theme decorations that will cost you $100. Bold that, red that. Okay, the advertising, posters, and decorations all paid in advance of whether the event happens and whether the event happens or not. So that tells me that they are all pre-expenses. So I'm going to go down and I'm going to go down to pre-production. I've already got rent in there at $300. I'm going to do posters. Posters and advertising. Really low poster and advertising costs. I'm going to go posters and advertising together. I'm going to do posters and advertising, and that's $65. I'm going to also do decorations at $100. Okay. And I'm just going to copy my formula. There's one unit, and I'm just going to copy this formula from cell E31. I'm going to copy it to E32. I'm going to copy the same formula to E33. So I have those expenses down now. Okay, so if I go back up, hiring an audiovisual tech that charges $28 per hour to create stage. Okay, so let's go back up here. Hiring an audio tech that charges $28 per hour. Okay, I'm going to bold and red that. The audiovisual tech requires 5 hours. Okay, I'm going to bold and red that. To complete the setup during the event turnout, you will need to pay your venue staff to set up the stage and furniture for the event. Okay, so that's $28. Your quote says it will take 2 people 6 hours at $18 per hour. Okay. You are anticipating a total of 100 guests. There we go. That's helpful. Bold, red. As part of their ticket, they will be receiving a tote bag full of gifts, but the custom tote bag itself costs you $1. Bold, red. And you have to pay the bag in advance of the event. Pay for the bag in advance of the event. So that tells me it's a pre-production expense, okay, for that. Okay, so let's go down and sort of go through all of the different variables that we just did. First off, we're going to do the production operating expenses. So audiovisual tech. You have one person that gets $28 per hour. So I'm going to put $28, and they work 5 hours, right? So I'm going to then total that equals the sum of 28 times 5. Okay. First off, that's audiovisual tech. The second one is furniture setup. And let me go back up. The furniture setup was 2 people, 6 hours, $18 per hour. Okay. So I'm going to go $18 per hour. But it's 2 people times 6 is 12. So I'm just going to go equals the sum of 2 times 6. So that's 2 people at 6 hours, right? To get 12. And then I'm going to just copy my formula from cell E38 to E39. So I'm just going to go Control C. I'm going to go to E39 and go Control V. Okay. So I've got $192 there. $108 per hour. 108. 2 people, 6 hours, $18 per hour. I got that wrong. Not $16 per hour, it's $18 per hour. Okay, that's correct now. Okay, and then I had this other expense that was tote bag. Now it said that they cost me $1 per person, but you have to order and pay for the bag in advance. So the question is that a source deduction, right, or is it like a pre-production expenses? Well, it's not really a source deduction because in source deductions, you don't even get to see that revenue. That has to go out and get paid. In this case, it sounds very clearly to me like it's a pre-production expense. And so I'm going to go under pre-production. I'm going to go to tote bag. And it's something you're saying that you want to do. So if you only sell 80 tickets at the end of the day, you may be off, but you think you're going to need 100. So I'm going to go at $1 each, and I'm going to go 100, right? I'm going to sell 100 of them. 100 tickets equals the sum of $1 times 100 gives me $100. So I'm now completed all my stories. So I just got to go now and create all of my event, all my math. So I've got 100 tickets sold. So I'm going to go 100. Okay. My tickets sold at $14. I'm going to go equals. I like to use the round formula sometimes because it's going to be helpful for you for if there are slight differences anytime you're multiplying that will cause you to have incorrect numbers that get input into D2L. So I'm going to go equals the round. I'm going to go 100, and I'm going to multiply it by the $14. And I'm going to go to the second decimal place, and I'm going to put a bracket. So I've got $1,400. So my total ticket sales revenue, I'm going to go equals the sum of, I'm going to total these three columns, and I'm going to hit a bracket. So I've got $1,400. Now what I like to do here is, if the source deductions are all based off of 100, instead of putting 100 plus 100 plus 100 here, what I tend to like to do is link them to the one area. And if my total tickets sold are 100, so in other words, if my total tickets sold are 100, what I'll do is I will just go equals, and I'll put 100 there. Now, a little trick in Excel. So if I goes equals 100 and I just want to copy that, Control C, Control V, see it doesn't come through because the next cell down isn't the number, because Excel floats down with you. I'm going to do this. I'm going to hit F2. I'm going to say, in this formula, if you're going to copy it, it equals E7. If I copied that formula down to Control V, you'll see that this formula says equals E8 because it flows down. I'm going to go here. I'm going to go instead. I'm going to go F2 equals E7. I'm going to put a little $sign. What that does is, if I freeze it, it freezes that next number. So if I copy it down, it says always copy cell E, but always copy 7. Don't go to 8 if you copy it. So I'm going to go to Control C now. I'm going to copy that, and I'm going to copy that. So what you'll see, instead of that last time we saw E8, it's got E7. Okay. So the last thing I'm going to do is I'm just going to go equals round. Just going to try to use this formula a little bit more when I'm doing source deductions, or I'm doing percentages or anything like that. I'm going to go equals round. I'm going to go $2, and I'm going to multiply that by the 100. Okay. And I'm going to go to 2 decimal places, and I'm going to go there. And I can just copy that formula. And now I'm going to total my source deductions. Okay. Equals the sum of those 3 rows. There you go, $378. Now, my gross box office receipts, this is line 5. If you're looking for the definition of what they are, you can go to definitions. You can go to 5, gross box office receipts. It defines what they are for you. Okay. I'm going to go gross box office receipts is basically the sum of the $1,400 what I'm getting in revenue, less my total source deductions. So this is the money I have left over. So I've got $1,022. So that's the amount of money, kind of like I showed you the ticket sales example where you're selling tickets for $53.25, somebody purchased it, but you as the promoter only get to keep $36 or $32. Almost identical to that example. That's what happens. So then the average revenue per ticket sold is equal to the sum of 1,022, and I'm dividing it by the total number of tickets sold, okay, for $10.22. And if you ever want to look at the formulas, you can see the formulas here to the right, okay? So even though I'm selling tickets for $14, I'm, as a producer or promoter, only keeping $10.22 of that, okay? I'm going to go down and look at my total pre-production expenses equals the sum of. I'm going to total those. I'm going to total my fixed operating expenses, and these are all fixed actually. Both of those are fixed. I have 0 variable operating expenses, and I'm going to go equals the sum of lines 9 plus 10 plus 11, okay, which is basically total production operating expenses plus 356 plus that. My total is $921. And so my net profit is equals the sum of 921, which is 1,022. My gross box office receipts, 1,022, less my total expenses, which is 921, and I get $101. Okay. So you now have all the information to be able to enter that question and the answers to that question in your in D2L. So you would go back to event math and you would start to put in your answers here. Okay. And be done from there. I'm not going to put them in. I think I'll leave you to do that. But that's an example of how revenue and source deductions work and how they'll work in event math. I hope this video has helped you, and we'll see you in class. Bye.